Yo, what's good YouTube? It's your boy Oskate. You already know how I'm rocking. I just want to make a quick video on how to not lose your money, on what market conditions to actually trade, because I know a lot of people have been getting caught out left and right last week. So I just wanted to make this quick video, and I really think this video might be like the make or break for some people, because if you understand this, if you truly know when to expect the expansion, you're chilling. So let's get straight into business. There's 4 types of price delivery: retracement, reversal, consolidation, and the expansion. I personally like to trade the expansion unless we have a huge range where we could retrace to. And I will talk about that in a bit. But consolidation, y'all already know how last week was. Just chop, and then you're like, let me trade this turtle soup, and then it comes back, soups you one more time, and you're like, okay, now it's a real soup, and then it comes back, soups you again. Like, bro, you don't want to be in there. You don't want to trade those stuff. And then we have the reversal boys on Twitter calling the tops. Every week I see a new post. This is the top, this is the top, this is the bottom, it has bottomed out. Like, bro, are you here to make money or to get likes? It's actually getting cringe. Like, you guys are reaching. So, for example, price keeps going up. Price going up for how many weeks? 3 weeks. And then people are like, okay, this is the top. And then it just went down to soup a previous low and go up again. And then they delete their post. I don't know what they're doing, but like they're just calling reversals and wanted to get a million pip move to post on Twitter. You don't want to be one of them. So you want to trade the expansion, and maybe if you're advanced enough, I'm not saying go and trade the retracements. So you want to trade the expansions. What are the expansions? Just going up and then just going down. You want to trade these expansions. It's not too complicated, right? Why do we not want to trade the retracements if we are not advanced enough? Because sometimes price doesn't want to retrace enough. And if you don't know your ranges, you can get caught out. You're going to be like, this is a retracement, goes down, makes a bigger range. And you're like, this is a retracement, goes down again. And then finally it retraces. But you didn't catch the retracement because now you're scared to trade because you got stopped out already twice. So that's why if you are not advanced enough yet, if you don't know how to properly use time frame alignment, don't try to trade the retracements. Become good at trading the expansions. And then, after then, you could trade retracements. So that's what I want to tell you guys. Let me go over an example on EU. This year was beautiful price action. Yo, I just went through the editing of this video and it's a jam. But guys, don't take everything I'm saying for like the holy grail. Experiment yourself. Test everything out yourself. That's how you improve. And sometimes I be saying like, don't trade this retracement. Don't call this up. Don't do this. Don't trade this soup here. But they might have been tradable. But I'm just trying to keep the video simple. So don't take everything I say when I explain it in the example as the holy grail. Like I said, I can show you actually right now. Like I said, there's a lot of chop here. We don't respect this fair value gap, but we sweep it and then we deliver some upside move. Like you could debate if that's tradable. That's what I mean. So those stuffs, like just take it with a pinch of salt, test it out yourself, and peace. Let me mark out 1st of January. And guys, I got so much to do and I'm still making a little video for y'all because I needed to hear this in my beginning journey. And nobody ever told me just trade the expansion. But oh well, like it flies over your head. Maybe I have heard it back then, I don't know, but I guess it flew over my head or it wasn't explained properly. So this is the 1st of January 2023. And as you guys can see, we are in an uptrend and we just follow the uptrend until something gets disrespected right here. And then you can anticipate, there's a breaker here and then we respect the breaker. Then you can anticipate some shorting. We don't call a top here. We don't call for a reversal. We just follow it, follow it, follow it. Just follow the flow. It's not hard. And then right here, there's some chop. I would call this the consolidation. And you do not want to be in here. You don't. until we are out of the range, and then we see another fair value gap here, and then you want to follow it. And then you make a few bands right here. That's it. Let the capital do the heavy lifting. And as you guys can see, another chop. We don't trade this chop. And then when we're finally out of the chop, you can see a fair value gap gets respected, and then you can start to short. It's that simple. It is truly that simple. And now let me explain you why we don't trade retracements. So we're going up here, and then we retrace a bit. Are you going to try to trade this? Tell me, are you? Because I'm not. And then, for example, here, it retraces a bit, but are you going to waste your mental capital trying to get these small retracement moves? You see these retracements here, 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 here. Unless you're advanced and you know how to work with multiple dealing ranges, don't try to catch the retracements until you're profitable, in my opinion. You can do whatever you want. I'm here to give lessons that I wish people would have told me. So here we consolidate, we go out of the consolidation, we have a fair value gap, and then we consolidate again. After we, listen, this is another gem. After we don't push up, after tapping into this retrace, after we tap into this fair value gap, you should be sidelined. You should wait until we get one-sided displacement again, and then we get it right here, and then it continues up. This is probably like some CPI release. And then we come all the way up here, and then we see some chop. And then once we see price not holding through these fair value gaps, we can anticipate price to reverse. And there's people calling this as a reversal already, but we are waiting for price to tip its hand to us, and it's respecting this fair value gap. So what can we expect when price is disrespecting? Then we follow it, but respecting this, we can expect the expansions to happen downwards. We don't trade this retracement here, follow it. We don't trade the retracement, follow it down. Don't trade the retracement, just keep following the trend. Like they say, the trend is your friend. It's truly that simple. And then we have another chop here. And then we go to the upside, we respect these fair value gaps here, and then we can anticipate price to go up. But it's not until here we get like the green light that we're actually bullish. And then you see respecting the fair value gap up, respecting this fair value gap up, respecting this fair value gap up. Imagine how many opportunities there were in there to make some money. It's that simple. That's how you follow the trend. And then we have this huge retracement here. And then like, it's arguable if you could trade these retracements, yes or no. But as I said, until you're profitable, just trade the continuation until the daily and the H4, the D and the H4 is telling you otherwise. And that's when I applied this, that's when my win rate truly went up and my trade frequency went down. I gained more RR at the end with less trades. It's that simple. So I hope this video will help some of y'all. It's just 7 minutes long, maybe 8. If your TikTok brain can't handle this, you're making a G. I thank you so much for watching, everyone. Like, comment, share, and subscribe. Hit the bell. Follow me on Twitter. Join the Discord with the Market Milkers. I'll talk to you guys later. Peace.